Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player. Hi folks, Ira Epstein with your weekend financial market update, and this is for Friday. This is your weekend version, Friday, October 20th, 2017, and it's 3 p.m. Central Daylight Time. So you still have a few minutes left before they close the futures, but I want to get this done early today. As you can see, you're up in all the stock indices. The interesting part is I'm not sure the market didn't get overzealous in what's going on right here. What the marketplace did is it saw that the Senate did pass, with one dissension on the Republican Party, Rand Paul's, a budget proposal that they sent right on over to the House. That is the first step in getting a budget done. It's a big, important step. It also opens the door for tax reform. At the same time, this afternoon we released the trade deficits, and in looking at it for the fiscal year, we only lost $666 billion. We had a surplus in September of $8 billion, but a year ago, September, we had $33 billion. Part of the reason, aging population, Social Security payments, Medicare costs, I can go on and on. The key is, whatever's going to happen cannot in the near term, if it gets past, be revenue neutral. It's probably going to put more pressure on the market. I don't think the market cares. The dollar's strong as can be. The market's looking beyond it, saying, listen, get a budget proposal, get more money in people's hands, and maybe the valuations of the stock market aren't so high. Get none of that done, and you might have high valuation. That's how analysts upon analysts, as you watch TV, are probably talking. Okay, let's just take a look at what we've got. Now I'm going to go back to the NASDAQ. You cannot argue this isn't a market that has just launched itself. Remember, these are monthly bars. So since 2016, 4250, 4300, up to 6110, you're at new all-time highs right now. When we go to a weekly area chart of closes, it's up, up, and away. When you go to the moving averages, well, I didn't put them on this chart. I just wanted to put a weekly chart without the moving average. I should have put it on, but I didn't. We'll get to it in 1 second, and I'll show you why. I forgot. This is the swing line. You got a lower low and a higher high. That is not a trend, by the way. A trend is made up of higher highs and higher lows. That does not mean you don't see this market is in a general move here. And if we come back to these charts, it's pretty hard to argue this market isn't in an overall uptrend. But in the short term, if you define a trend as higher highs, higher lows as an uptrend, you don't have that. You got a lower low and a higher high. The 18-week average, I had it on the other one by accident, is right here. And that is the number that you have fallen back to since July, over and over, and where the market has been able to find its support. What about resistance in the market? If you put on the upper Bollinger Band, you are literally, each time you've gotten here, you have stalled out. So if we go to last week, let's do that right now. This is the 13th. The market closed 60.99. The upper Bollinger Band was 61.23. You got pretty close at 61.04. Right now, you've gotten to 61.32. The upper Bollinger Band's a little higher here at 61.52, so there's still some room, and the market hasn't quite hit it. But it's a zone that you have to pay attention to as resistance. Now, what's going to happen is that number's probably going to lift itself on Sunday night. Why? Because you're going to start another week of trading, and the way the math's going to go, it's going to drop a number back here and add some numbers up front, okay? That's how the math will work on that. When I look at momentum, it's one way. It's to the upside. Bias is up. You've held the 18-week moving average consistently. And the trend, well, there isn't a trend, but you certainly have the other two elements. When we go to the S&P, it's different. You have a trend, higher lows, higher highs. The market today is at 25.73, right against that upper Bollinger Band. In fact, it's a little bit over it, which is 25.65. Okay? When we take a look at the Dow, you're over the upper Bollinger Band. Now, you can get over the upper Bollinger Band 5% of the time. I count each bar that's over it, if it closes over it, as one of those percentage points as a rule of thumb. When it's under it, the same way. We haven't been under these bands in God knows how long. But that means we're a little ahead of ourselves. Does it mean the market has to pull back? No. But generally, if you look and you're buying upper Bollinger Bands, there's a way to have bought it cheaper than the upper Bollinger Band in the short term. That doesn't mean that if you didn't buy it back here, you're not higher now. That's not the point. The point is, what do you do when you're trying to enter, if that's what your goal is? The Russell is by far the laggard of this group. It's got a lower low, a higher high. Okay, it's hits the upper Bollinger Band, and it was over that. If you take a look at it, if we take a look at this close, you closed just under it on last week, but you were over it the week before, and this week you're going to be under it again. Momentum is still up. So as a group, you can't get away from the fact that they're all still upside momentum, that they're making new all-time highs, and if you fight that, it's been difficult. It's that simple. When you go to the VIX, especially for those of you that watch my daily videos, and this is the daily bar of the VIX, what the markets often do in the VIX is it's been having a history of getting this sideways action and then giving you pops out of it that aren't lasting. So here you were, this was Wednesday. I don't want to give you an idea, this is a big-time history back. You pop out of it on Thursday, you make a new break low today. Do you see what I'm getting at? So people are not concerned at this point in time about reactions to the downside in the market. They have fleeting moments, and that's all that I could say. I realize you're going to tell me, and my mother tells me, eventually everything changes. Okay, but it's been since 2008-9. It hasn't been changing. In the note market, so if the Fed is going to be cutting its balance sheet, if Europe is going to start cutting their balance sheet, which we'll find out soon from Mr. Draghi, you're going to have roughly, at the current rate of that going, how many billions out of spending? Trillions in reality. And what I think we're starting to get is the market is starting to price that in as interest rates keep doing what? They're gradually trying to work higher. On the weekly chart, you're in a downtrend. Lower highs, lower lows, momentum still pointing down. Next support, potential at least, the lower Bollinger Band around 120, what is that, around 124.15 or so. The dollar index, with all the power that it had today, it really stalled against this 18-week moving average of closes. It did this before. It got up here to the 94.10 level, the upper 18-week average was 93.95, broke down to 92.59. That's a heck of a break. I mean, if you're on a futures trader, it's $1,600, and now it's come off that break 100 points higher, roughly, into that 18-week average. The trend is up, if you will, the momentum is up, the bias is down because you're under that 18-week average. If this market doesn't take out 94.10 and reverts under 92.59, it gets bearish again. If it can close over the 18-week average, it adds to the bullishness. Where might an upside target be if it's bullish? 96.30. Where might a downside target be if the market gets under here? Could be the 90.70 area. Don't know. In the euro currency, it's a flip-flop. It's a different mirror of the dollar index. It's just the reverse. Lower highs, lower lows, downtrend, downside bias. It's holding the 100-week average. Is it going to get under it and go anywhere? The problem, of course, is the chart can do one thing, and how does the market react if Mr. Draghi says, no, come next year, they're going to cut purchases from $60 billion a month to $25 or $40 billion. That is the dilemma that the market's facing. In the Aussie dollar, the trend has been down. lower highs, lower lows. To reverse the trend up, if the market gets over this 78, 79 level, you could end up with higher lows, higher highs, back to bullish. If the market stays like this and starts down, you could be going right here. The bears have control right now, the trend is down right now, and momentum is down. In the Canadian dollar, lower highs, lower lows, momentum down, bias down. The bears are in control of this. The bears are in control of the Aussie dollar. And in the end, the bears have grabbed control of the yen. The yen means that there's no safe havens looking to buy. North Korea hasn't been in the picture. What we are going to hear very shortly is about the 19th Party Congress in China. Their meeting ends on the 24th, so we're going to have a lot to digest next week from what they say. But you have lower highs, lower lows. You're in a downtrend. Momentum is down. If the market wants to break down to potential support of the Bollinger Band, it's 87.63. Then in the Brent, you are still running with a premium of about $5.50 to $6, back and forth with that market. Now, when we look at a weekly bar chart of the Brent, you still have momentum up. It's gradually trying to break down. Do you see how the red line's getting under the black and starting to turn? They're not under 80 yet, but if they get under 80, it could be a problem for the market. It's in an uptrend. It's got higher lows, higher highs. It's a little lengthy in its duration. It's had resistance at the upper Bollinger Band, and the magic figure right now is the $60 mark. A warning sign comes if the market breaks through 55.05. That will break that uptrend look, and it would probably be accompanied by momentum turning down. So that would be one of the warning signs. Obviously, if Brent's going, crude's going. Now, we saw that the amount of rig counts today, this is Friday, the Baker Hughes reported were down 7, and natural gas counts were down 8. So for a total, 15 lower. And that's with the market having done very well coming off this $45 range. You're not attracting more rigs. That's interesting in itself. You would think that export business, we want to get more oil out there because we're exporting so much, and I think we had the second largest amount ever we just exported. So it was nearly 1.8 million barrels a day that we're doing in export. It's pretty large any way you look at it. But still bullish, resistance around the $53 level. Momentum is still up on this chart. Natural gas. You know how crazy the weather has been. It has been, I'm in Chicago, we're in the 70s again. This is going to be very soon Halloween. I remember growing up as a kid, we had some snow on the ground, but it was always cold. We haven't had cold. We're supposed to finally get it next week. So we'll see if this market's able to find support. Here's what you do know. Notice how the Bollinger Bands have narrowed in here. From there, eventually come moves. It takes a while, but once you get these Bollinger Bands coming in, it's like a spring coiling in a pipe, this black line, and from there comes moves. Right now, the market has a higher high, lower low. It hit the lower Bollinger Band, bounced away from it up to the 18-day average of 18-week average of closes, and it still has, as I'll call it, downside bias, downside momentum, but support between 277 and 274.5. I want to remind you about one of my favorite readings, and I hope it becomes one of yours. It's Modern Trader magazine. And they're offering you a 1-year subscription to it for free. Now, if you go to their own website to get it, $79 for a year. Through us, free. Goes by email to you. And they have this fabulous, I think it's called Zinio reader. And it's probably the top I've seen on the market. I don't get paid a thing for giving this to you, by the way. So people have asked why you do it. I do it because I love the magazine. Okay? It's the simple way, and it gives our clients and friends something to read. Great articles, covers ETFs, the futures market, options, individual stocks, trading patterns, trade ideas, be it anywhere that you can imagine. great technical stories on trading, and in depth. That's the beauty. They show you what they're doing and basically how they're doing it. So when you see the stories, you don't just get something about writing. You're going to get a lot of great graphics to go with it. They teach you what they're talking about in there. And if you get magazine after magazine, imagine the library. I believe I have it from the first edition ever published. So that gives you an idea that I am an avid collector of all this. How do you get it? Just give us a call. You can go to our website. You'll see a carousel of free offers. You can click up here if you're watching me on YouTube, or underneath us it says click here for Ira's free information. Have yourselves a great weekend. I'll see you all come Monday.